This video is for educational purposes only, not financial advice. Always consult a certified financial advisor before investing. We are not affiliated with State Street or any ETF provider. What if I told you the world's very first US ETF launched back in 1993 is still one of the most traded investments on Earth in 2026? And today, that ETF is trading at around $723 per share. That's right, we're talking about SPY ETF, the original, the giant, the ETF that helped create the entire exchange-traded fund industry. But in 2026, with lower-cost competitors like VO and IVV everywhere, is SPY still worth owning? Or is it simply living off its legendary reputation? Today we break down everything you need to know about S&P 500 ETF. Trust, ticker symbol SPY. Welcome to ETF Holdings USA, the only channel that breaks down every holding inside America's top ETFs. Simple, clear, no Wall Street jargon. Let's jump into SPY. What is SPY? SPY stands for S&P 500 ETF Trust. It is an exchange-traded fund that tracks the S&P 500 index, which represents 503 holdings across 500 of the largest publicly traded U.S. companies. When you buy one share of SPY, you are getting exposure to America's largest tech companies, major banks, healthcare giants, consumer brands, industrial leaders, energy companies, utilities, real estate firms. It is basically a snapshot of the entire U.S. economy inside one ETF. Why SPY is historic? SPY launched on January 22, 1993. That makes it the first U.S.-listed ETF ever created. Before SPY getting broad market exposure was slower, more expensive, and less flexible. SPY changed investing forever by making it possible to buy the entire S&P 500 as easily as buying a single stock. Even in 2026, it remains one of the most actively traded ETFs in the world. Who manages SPY? SPY is managed by State Street Global Advisors, one of the largest asset managers in the world. They manage hundreds of billions of dollars through SPY. Their job is simple: track the S&P 500 as closely as possible. No stock picking, no active management, just pure index tracking. ALL Holdings beyond top 10. Most people think SPY is just tech. It is not. Yes, tech dominates, but SPY gives exposure across the entire US large cap market. Here is what is inside SPY beyond the top 10. Technology: NVIDIA 7.58%, Apple 6.66%, Microsoft 4.91%, Amazon to 3.64%, Alphabet minus 2.99%, Meta minus 2.24%, Broadcom minus 2.62%, Financials: Morgan Chase, Berkshire Hathaway minus 1.57%, Visa, MasterCard, Bank of America, Healthcare, United Health, Eli Lilly, Johnson & Johnson, Pfizer, Abbott Laboratories, Consumer: Walmart, Home Depot, Costco, McDonald's, Nike, Coca-Cola, Energy, ExxonMobil, Chevron, Industrials, Caterpillar, Boeing, Honeywell, GE, PLUS, real estate companies, utility providers, communication services, materials. This broad diversification is why many investors use SPY as their core portfolio holding. Here is exactly how SPY is allocated. In 2026, technology to 32.91%. The biggest sector by far: AI, cloud, semiconductors, software. Financials to 12.59%. Banks, payment processors, financial institutions. Healthcare to 9.47%, defensive but innovative sector. Consumer discretionary to 9.86%, retail and consumer spending leaders. Communication services to 10.28%. Meta and Alphabet, industrials, infrastructure and manufacturing, energy, traditional energy giants, utilities, stable cash flow businesses. Real estate, REITs and property exposure. This sector mix gives investors growth plus stability in one ETF. Over the last 5 years, SPY has delivered strong long-term returns, powered by AI expansion, big tech growth, economic recovery, corporate earnings strength. Despite periods of volatility, SPY has continued rewarding long-term investors since 1993. Average annual return since inception, 10.74% per year. The key lesson: time in the market beats timing the market every single time. SPY expense ratio, 0.09%. For every $10,000 invested, you pay about $9 per year. Low compared to actively managed funds. But here is the catch: SPY is not the cheapest S&P 500 ETF. VOO charges just 0.03%, only $3 annually per $10,000 invested. This is one of the biggest criticisms of SPY in 2026. SPY dividend yield in 2026, 1.07%. Investors receive quarterly dividend payments from the underlying companies. SPY is not a high-income ETF. It is designed primarily for growth plus broad diversification. The dividend is simply a bonus. SPY versus VOO. This is the comparison everyone asks. SPY expense ratio, 0.09%. Most liquid ETF in the world. Massive daily trading volume. Best for active traders. 5.0 expense ratio, 0.03%. Lower long-term costs. Ideal for buy and hold investors. Most important fact: they track the exact same S&P 500 index. Performance is nearly identical. The only real difference: FES and liquidity. If you trade frequently, SPY wins. If you invest long-term, VOO wins. Future outlook 2026. Looking ahead, SPY performance depends on AI growth. If AI spending continues rising, megacap tech keeps pushing SPY higher. Interest rates. Lower rates generally help equities. Corporate earnings. Strong earnings support higher prices. U.S. economy. A healthy economy benefits the entire index. Biggest risk: SPY is heavily concentrated in megacap tech, 32.91%. If tech slows, SPY will feel the pressure. Should beginners invest? For beginners, SPY is absolutely one of the simplest ways to start investing. With one purchase, you instantly own exposure to 500+ elite U.S. companies. It offers diversification, simplicity, transparency, long-term growth. The only question beginners should ask: SPY or VOO? If you are buying and holding for decades, many investors prefer VOO because of lower fees. But if you want the original ETF with unmatched history and liquidity, SPY is still elite. Is SPY still worth buying in 2026? Yes, but it depends on your style. Choose SPY if you want maximum liquidity, tight spreads, easy trading. Choose VOO if you want lower costs, long-term fee efficiency. Either way, you are investing in the same powerhouse S&P 500 index. Now we want to hear from you. Drop a comment below. Team SPY or Team VOO? Which S&P 500 ETF are you choosing in 2026? If you found this breakdown helpful, hit like and subscribe too. ETF Holdings USA, new ETF breakdown every day. See you in the next one.